The so-called global trading hours, Ron, would start at 4 a.m. each day, end at 8 p.m., followed by a 1-hour break for maintenance, testing, and clearing. Is this a good idea?
Well, I'm not sure. I would lean towards no right now, Scott. I mean, if you go back to the origins of the New York Stock Exchange in 1792, they posted prices twice a day. When I got into the business in 1984, the market opened at 10 a.m., closed at 4, and when they expanded to 9:30 a.m., there was an enormous uproar on the floor. Now, since then, of course, we've added after hours, before hours, night sessions, and the like. I think the key questions around this expansion, if indeed it takes place, is what liquidity looks like, what staffing looks like, what the level of, if you will, gamification looks like with respect to how people trade stocks. I think those are some important questions that regulators will have to get their minds around.
I mean, you're channeling what some of the harshest critics seem to be suggesting today. This from Wells Fargo's trading desk, which really got us talking today. Quote, "This is literally the worst thing in the world. I cannot think of an action that single-handedly gamifies the stock market even more than it has already become. This is the epitome of making trading even more like gambling." Is that too much?
It's probably close. It may be a little too much. I mean, I'm thinking about the evolution of digitization, decentralization, gamification, and tokenization, all of which will be fully, I think, in place in 2026. And that's part of this evolution that the market's going through, maybe even revolution. I do think it would engender behavioral changes among investors to trade even more than they're already trading, because the window just simply doesn't close. There's no way to shut off the machine, if you will. You know, if you go back again to the time in which I started in the business, 4 o'clock was a hard out. There was a 15-minute session on the Pacific Coast Exchange that Jeffries ran in case there was a tape bomb that you could trade, but very thinly traded. And I suspect we might see some of that in the wee hours of the morning, where there's not a lot of liquidity and you start to get very wide price swings that could be, not just increase volatility, but actually hurt investors in the process.